here on the show. It's Liquid Lunch. It's me, Hugh, and Sandra's here, and it's Thursday, August 27th, 2015, and boy, it seems like a long time since we've done the show, Sandra. When was the last?
I know.
When was it?
2, 3, 4 weeks ago.
Okay, good. But let's get started today because we've got Martin Charney joining us.
We've got numbers on the brain right now.
Well, we're going to be talking some numbers here with Martin because Martin is in the finance business, right, Martin?
He knows
Correct.
all about numbers.
Money on Tap, that's my company.
Money on Tap, that sounds great. Let's turn that tap, wide open.
Money on Tap Inc., actually.
So do we have, like, you can have a beer house where you go for beer on tap?
To Money on Tap, that's it.
So is this like a money house where you can have money on tap?
Well, I'm making various kinds of money available to many different types of companies, different types of industries, as well as to individuals. So I collect forms of funding.
So, okay, so it sounds to me like you're a bank.
One of the things I do, I represent banks, and that's one of my funders. When people are particularly well qualified, they're entitled to bank funding. But very often people do not have the required financials, balance sheets, income statements, so they cannot get a bank line. And when they threaten to be able to, I say, don't take it, grab as much of it as you can, because bank funding is not as easy as people think. It's not a matter of going into the bank and saying, hi, I need 100,000 or 30,000.
And they just give it to you, they don't.
We have a joke, we say that the banks take 6 weeks to say no. We take 1 week to say yes.
Oh, that's a great tagline. I mean, that's awesome.
That's an amazing tagline. So do you want to ask the question?
Well, I mean, it just seems to me it's funny that tagline, it takes 6 weeks for a bank to say no, and it just strikes me often is that one of the things that's really keeping Canadian business in particular back is the lack of financing in a lot of cases, that we could be growing the economy so much better if we had decent financing for business.
Well, I think that there's a lot of business funding available, but companies often don't realize it. I hear very often, I would say every 2 or 3 weeks, people say, Mr. Charney, I didn't know that kind of funding existed. If only I'd known about you 6 months ago, 2 years ago, whatever. So there are a lot of funders out there besides the banks, but each funder looks for a specific kind of security. Like factoring is one of the big ones, and I'll explain what factoring is, because Sandra, you asked me.
Well, that was what I said when I meant.
See, I wanted you to ask that question, Sandra.
Oh, okay.
Because I already know what it is, but let's talk about it. Okay. What is factoring? Because it's a particular kind of business financing.
Let's take Joe, the cabinet maker. He's got a furniture factory. He's our client. What happens is, as he delivers, let's say, a dining room suite, I want to make it very simple, to the bay, he needs the money immediately because he's got to pay his suppliers and his wages. The problem is that the bay, or any retailer for that matter, doesn't pay for 60 days, which sometimes, not in the bay's case, but sometimes it becomes 90 days. So we as the factoring company come in and we convert his business into cash on delivery. We pay, let's say the invoice is 10 grand. So within 24 hours, we'll pay him 8,000 bucks. When we collect, when the bay pays the 10,000, we give an immediate refund of the 20% reserve, less our fee.
Okay.
How much is our fee? At this point I say not enough, but it's a reasonable amount of 1.5 or 2 or 3. It actually, our fee depends on how long our money is outstanding.
Okay, I see.
So if our money is outstanding for 30 days, work on, 1.5%. If it's outstanding for 60 days, it's double, it's 3%. So our client would end up getting 97% and we get 3. But he doesn't care about the price, because he doesn't care about the cost of money, because he's got the money, most of the money, immediately. So he can get a discount from his supplier. He can become a lot more competitive with many more customers, giving them the terms that they demand. So this
is like a service fee for him.
Yeah,
really.
It's a service fee.
To me, it's like it sounds like companies who use those Visa machines for every transaction.
Right. That's a form of factoring. That's Mrs. Smith goes into a restaurant and pays with her card. She buys herself 30-day terms, but the restaurant goes to the bank the very next day,
Yeah.
and they get cash.
Interesting. Yeah. So that is a form of
Factoring.
which is
Visa, MasterCard, which brings me to another form of funding, which means if a restaurant needs a cash advance, they normally cannot borrow money or lease. Let's say they need a new frying machine for 20 grand or a fridge or something. Normally a restaurant don't have sterling credit because it's a hard business to run.
Yes, yes.
So they would come to me and they say, I want to borrow X amount. I will say to them, how much is going through your terminals, your Visa, MasterCard and debit terminal? So let's assume on a monthly basis they got 30 grand going through.
Okay.
We can lend them a cash advance. We can grant them 30 grand and take it back slowly through their terminal over a 6-month period. That's called merchant cash advance.
Does that mean you have direct access to the funds that are going through the terminal?
We
You can arrange
tell
that?
Moneris or Chase Payment Tech, we don't do the processing,
Right.
but we just lend the money and we get it back.
And because you can make an arrangement with the pay intermediary,
Right, with
Yeah.
the restaurant. They instruct the
Moneris, or
processor
whoever. Yeah.
to pay us.
Okay.
Correct.
Well, that's
So there's a whole bunch of, there's all sorts of different kinds of money out there. Somebody sells a house today. This is what I call from the proceeds deal. They sell for 600,000, let's say. The mortgage is 400 and there's a commission. So there's 170 grand net proceeds. But the seller of the house needs the money today. So let's say we waited, how long did we wait? 10 days, and the buyer's finances is okay. The mortgage is granted, approved, whatever, and everything's fine. I got my bit of a South African, the old vocabulary coming through, as you can see. But it all, the same concept.
Still makes sense.
Still makes sense.
Yes.
So what happens is, this seller needs money because he's bought a house or he's getting divorced or whatever his reason is. He needs money. He can't wait until, let's say, the end of October or November for closing. So I've got a few funders that do that sort of money. So now,
And that's bridge. Is that bridge financing?
yeah, you
Is
can
that
call
what
it
they
bridge,
call it?
but it's secured really because the lawyers do an authorization and instruction to pay us as the lenders.
And there's some kind of somehow the property will secure that if there's
Right.
a worst case scenario.
Because the money goes into and out of the trust account of the lawyers, the escrow, and then it comes to us.
Well, it's a very, very creative way of working with money.
See, the banks won't necessarily do either of the three forms of money that I've spoken about: factoring, accounts receivable,
Right.
merchant cash advance with restaurants, or from the proceeds.
Well, it sounds to me like you're more of a personal banker almost. It's not because you're dealing with, I think, these issues that the banks don't deal with because they're so far removed. They just deal with like assembly line type issues, or the big things.
Right.
And you're actually matching the lifestyle of the person, because there's a lot of things that you can't imagine. So you're actually dealing with people's personal day-to-day things.
Well, to get back to the big money with companies, give you an example that, let's say there's somebody importing goods from China, which is not hundreds of millions, probably billions of dollars coming in to this country from China. So when our client, the importer, brings us a purchase order that he proves to us that the goods are pre-sold to Canadian Tire or a small retailer or a few retailers, but he doesn't have the money to pay China. So based on his purchase order that he brings us, we can pay the full cost of the goods to the supplier, wherever the supplier may be, Bangladesh, China, Israel, whatever.
Okay, so there's no company too big or too small.
No, we can do hundreds of millions. Our maximum with factoring is, say, 60 or $70 million outstanding at any one time.
Where do you get that money from?
Big companies.
So you've got a number of different kinds of funders, right?
Right. I've studied them for the last 15 years. I've collected funders like children, and I've learned to understand every detail of when they will lend and when they won't lend, and what security and what interest rate, what's their minimum, what's their maximum, how long will it take.
So you have to do a lot of research.
Yeah.
Okay, so what is the biggest loan or deal you've ever given for somebody?
The biggest was about 25 million that we had outstanding. It was
for one person.
One company.
One company.
It was a company making catalytic converters using platinum from where else? From South Africa, where I come from. And we were able to turn his business into a cash on delivery because the car manufacturers took forever to pay, and he couldn't have dealt with staying in business if he had to wait 60 and sometimes 90 days for his money. So as he delivered the catalytic converter, the exhaust pipe in simple English, we paid him within 24 hours.
You know, sometimes I think it would be great if all businesses were able to turn their receivables into cash immediately. I mean, it would solve almost everybody's cash flow problems.
Right. Well, some companies, businesses cannot turn their receivables into cash. Why? Because number one, they could have a bank line. But whenever they have a bank line, the bank has got their receivables as the bank security. And they will not release those most valuable assets unless and until they get paid. So if the receivables are less than the line of credit, then we're stuck. But often the receivables are more, and we can get rid of the bank, pay them off, and then we become the bank line. And we can give them literally hundreds of thousands of dollars based on their customers. So we often do not look at the financials and the credit of our client like the bank does. We look at who's going to pay us back. The bank, the client's customers, who in turn become our customers. Because we're giving our money to our client, let's say back to Joey, the furniture factory. And the Bay and all the other furniture retailers, those are the guys that pay us back. So it's very old concept. It's probably biblical in history, but
it's more going back to the roots, though, really.
Back to the roots, yeah. Somebody would fix the horse's shoe, and the owner couldn't pay until the horse did the work of transporting the goods, and then when he got paid by the customer, he'd come in and pay for the horse's shoe, something like that.
And that makes sense.
Yeah, business all makes sense. It's brilliant. That's why I love being in business.
Well, you mentioned you're collecting lenders like children, and I'm just kind of curious, what kind of lenders are there? Are they companies? Are they individuals? And you mentioned even they can be banks and institutions.
It's a big combination. We have people that will lend money against luxury items like gold, diamonds, or jewelry. We have people that will lend money, individual people that have got companies, will lend money against a car. A vehicle that's, let's say, less than 7 or 8 years old, that's done less than 150,000 kilometers. And people don't know about this. They think, you know, they just need a loan for a month or 2 or 3, and they don't want to sell the diamond or the car. They just want to use it as collateral, as security. Yeah.
So, and you mentioned too, so it's not just businesses, but also individuals.
Correct.
You're able to fund them
both
as well, right?
Right. There are lenders that will lend unsecured up to, there's one company up to 35,000. And they've made me a broker because I understand what they need, and they pay me. I don't charge any of our clients, believe it or not. Maybe I'm stupid, but I think that's why I've got a large collection of followers. I get paid by the funder when funding goes through to successful conclusion. That means when the client that's borrowing the money is happy.
So
I hate to hear of brokers that take 10, 5, 20,000 bucks and they disappear into thin air. That's giving me as a consultant a bad name.
Yes, absolutely.
I've never taken money. Sometimes I cannot find the money that he requires because it's not out there. He's not entitled, he's not qualified, his credit, his income, whatever is insufficient. But often before I go to the funder, I know exactly what is needed, what security, what's his credit, what do his financials look like if it's a company. So I'm not afraid of the N word. I just say no. We cannot find the amount of money that you're looking for based on the security that, if anything, that you may have up to offer.
Do you offer other alternatives, or do you try? Is that part of the consulting that you do? So,
Yeah.
okay, we can't do this because of A, B, and C, but maybe if you did this, we might be able to do this.
Right. I do offer what I call my open probe questions
Okay.
to try and solve either the company's problem or the individual consumer's problem. But very often somebody just, they're not worth, they cannot borrow because they don't have credit or income, or sometimes a job, and they see me in highlights in the media, and they phone me, take a chance. But I'm not afraid of saying no, I cannot help you, because I don't want to I don't want to lead a guy on and say, sure, I think we can do something, and that's not fair to him.
Yeah.
I'm just curious because I know you're involved with the Inventors Circle, and it seems to me that kind of thing where it could be fairly risky, and I'm just wondering if. But you seem to have a good understanding of the lenders, what their requirements are, and the ability to match that with what the borrowers have available. But I'm just curious about very high risk type of innovative either ideas or companies or products. Do you have any lenders that are willing to look at that kind of a risky venture and maybe take an equity position rather than hard collateral?
I did 3 deals. One deal was a manufacturer of a residential lift, as I call it. You call it an elevator. So that elevator costs about 25 grand to install into a residential house. I was able to make the 300,000 available that the guy needed, and then he chickened out. He didn't want or couldn't understand how his business could grow as fast as the venture capitalist may wanted it to grow. So I didn't have very good experiences. I know for a fact that approximately 1,000 applications for venture capital and or angel funding gets one funded. And it's just not my favorite form of funding. I like to have something that's more secured, based on leasing of equipment or mortgages on properties, property-based loans or factoring, something that I can get my teeth in.
So I'm just curious, like I mentioned before, I think one of the big things and keeping business back is the lack of funding that's available, especially in Canada because we're so conservative, especially the banking sector. But I'm just wondering, in your experience, are there, of the businesses out there that could be using your services, what percentage would you guess is not even aware that this kind of financing is available?
A big percentage. Take a stab at 3/4. 75% are not aware, and it's a pity for them to be looking for money that's not available when certain forms of funding is available. But a new company will have a problem unless they put in love money that's personally borrowed from the family or the mortgage. Now there's often a wife that is a co-owner of a house who, let's say she's inherited the money, and the house is mortgage free, so they don't want to use the house as security, which they could easily do. And the venture capitalists would often say to me, well, why must he put in his money if they have got a house that's worth $750,000 and they don't want to borrow? So I don't want to get into people's private marital financial affairs. It's none of my business. If they tell me no, they cannot borrow against the house, then it's no. And we've got to do our best to try and find, but they often need money for working capital. They need it for packaging. They need it for marketing, advertising, all sorts of things. It's all very well, I can come with my solutions of factoring, but if there's no product yet manufactured and it's not delivered, then we're stuck. You're right. There is a need for angel funding, venture capital, but as you say, people don't want to take a risk. The guy's got an idea. That's all he has.
They're just not willing to put their own skin in the game, right?
Right. These are some of the problems.
Well, I could see how if you have an invention and you're not willing to put your own funding in, why should I?
Right.
I can certainly see that.
Yeah. So they just want to see that
Yeah.
they are as committed as
Yeah.
you are.
Yes.
Right?
Yes.
I mean, you do have the shark tank. What's it called? There's a TV.
Dragon's Den.
Dragon's
sure,
Den.
Yeah.
I don't have a TV, but I know well about that. Dragon's Den. I'm not sure. I haven't seen figures of how many deals actually got funded. I'm sure many did, but I mean, that's a funding that I look forward to having, to representing a real good live venture capitalist. But I ain't got that in my armory, so I turn it down. I know, as I say, when to say no, when I can help and when I cannot help.
You mean you don't have the lenders that would be
Right.
willing to take those kind of risky ventures?
Correct.
What about this idea? Because I often think that there are people that have good ideas, but of course, it's important when you're funding anything, you look at the management team. Is the management competent? And so I wonder sometimes if a lot of these entrepreneurs, they have a good idea, but maybe what they need is a little bit of mentorship around business expertise. What do you think of that?
That mentorship comes in the form often of either good management. They've got to have a business plan.
Mm-hmm.
So they've got to have some form of expertise to draw the business plan. And very often I can tell that a business plan is overly optimistic. It's got to be realistic, because if they don't have the infrastructure, they cannot do their $1.5 million to $3 million in the first year.
Mm-hmm.
There isn't the infrastructure. And we ask who are the customers and who's this and do they have any orders. I can very quickly tell that it's
How
just a
realistic
figment
it
of
is.
somebody's
Yeah.
it's the hope, because people
Yeah.
are desperate often.
It's a dream.
It's a dream.
It's a dream plan.
Well,
it's not a
I
business
think
plan.
people sometimes take a long time to get ready to execute a business
Right.
well,
Realistically. There's so much preparation.
Yeah,
And some people haven't even formed a company. They're just going on a trading name,
yeah,
a business registration name.
yeah.
So you have to really build a trust in the with your I guess the vendors, the people, the funders, I guess, because they would also have to trust your assessment. I know you have to give them proof and here's what we have, but they would also have to have a certain amount of trust in you.
Sandra, that's an interesting question, because we often feel that we need to trust them, because after all, we are giving our money. So we don't say to them, stop looking. The first person to put the money on their table, they go for it. It's not often that I've been beaten to the pillar, the punch, because I know quickly who to phone and what type of. I've got all the applications under my Money on Tap banner, because I don't want to do a lot of work and then they go behind my back to the funder.
Right.
So we have to know, can we trust our client, and can we trust their customers to pay us in the factoring realm?
Okay.
Because
okay.
our client authorizes and instructs his customers to pay, let's say, to pay us. We cannot allow his customers to pay him, because we've already given him 80% of the action.
Right.
So then he could end up with almost 200%, and we out in the Canadian cold. Thank you very much.
Has that ever happened to you, man?
They sometimes do it by mistake, but if they do it twice, we terminate their contract.
But if they do it and it's by mistake, then they give it back.
Yeah.
So
And
you
sometimes
get it.
we get the money that we didn't buy that invoice, and we send it on to them.
Okay.
That's through
Okay.
good communication between us and our clients.
So is there ever a time where you had somebody that everything on paper looked legit, but you just had not a good feeling about them, and you said,
One of the first things we look at is character. Besides credit and besides customers, there's a bunch of C's. Those are three of them.
Okay.
So we do look at communication,
Okay.
and what looks like trust, although there isn't too much trust in business, because there's all sorts of systems upon systems that we don't have to trust people, because when money is at stake, people are desperate. It's not a matter of they, God forbid, dishonest. They just need to pay their wages, so they'll take an invoice which comes from a customer, they'll deposit, and they'll say, well, I was on holiday, my bookkeeper saw the check and she put it in. But that's in a way fraud, because they've already got paid.
Right.
So it's not that simple. It's a
So it's
matter of
communication,
credit of
Credit.
the client's customer and really the client,
Okay.
and the customers. Who are the customers? Who's going to pay us back?
And then character.
Yeah. Not and then
collateral.
first character.
Okay.
Who are we dealing with? Can he do? Has he been doing what he says he can do?
But it sounds like there's really actually a lot of room for growth here.
Yeah.
You said up to maybe 3/4 of businesses could use this kind of financing, but may not be aware of it at all. Right? So
Yeah.
it's an opportunity for them to maybe grow their businesses better.
And make them a lot more competitive by being able to give the terms that are demanded by the customers. Whether the customers, the federal government or the City of Toronto or the school board or the women's boutique. Women's boutiques, for instance, the schmutter business, they often require more than 90 days to pay. Why? Because they want to get paid by their customer, the retail, the consumers, before they pay for the goods to their suppliers. So factoring and the textile industry, apparel, has grown hand in hand because of that.
Wow.
You know,
Wow.
And I guess every industry has its own little quirks
Right.
and character.
like there's some industries we don't look at. For instance, software development, we don't fund. Why? Because normally, mostly I would say 80-90%, when a new software program is delivered and installed into the customer's computer system, there's pandemonium, it doesn't work, and need a number of months to fix up the bugs.
Yeah.
And then they don't pay us. So no factor that knows the business will buy those receivables. Another industry we don't touch is high-end jewelry, because it's too risky from a security point of view. Walk away with a diamond worth 50 grand, and where is it? It's in his left ear, or is it in his right ear? Where is it? But the construction industry we can do, any manufacturer we can do. Trucking industry is very important, because as the trucker delivers the load to Florida, he needs the money to pay his gas bills and the driver's wages. So the factor comes in, and within literally 24 hours of the load being delivered and the documents being at hand, we pay.
So people watching right now, maybe what are some of the other industries that you're keen to look at? And
Any
work with?
manufacturer, personnel, we look at staffing, any kind of importer or exporter, and wholesalers. In other words, or service, let's say landscaper. Anybody with company receivables, with money owing to our client by other companies, not Mrs. Smith owns a house and she's going to put a roof. No, I'm crazy. We can do what's known as consumer finance. If somebody wants to put a new driveway or a roof, I found a lender that's in what's called consumer finance. And they would register the roofer or the doors and windows guy as a merchant.
Right.
Yeah, how can I forgotten that?
Perfect. Okay. So, and then, but you are involved with the Inventor Circle, and I'm just curious, what is your interest in that? Because it seems like it could be a little risky. Certainly, it's
two
innovative.
things. Sometimes, believe it or not, they've got a product already moving, and they need factoring, or they need purchase order funding, because they've got goods that are pre-sold to customers, but they don't have the money to pay China. So there I come in.
Okay. So I can see the appeal with a Shark's Tank when they have a product and they've already got the model done, and so they've got some orders going, but they don't have the capital.
Correct.
Okay.
I could do good business with the Shark Tank's clients of 6 months or 2 years ago. Those people that went to the Shark Tank, they got money from the venture capitalists,
Right.
and now they've got receivables. That's when I need them. For that particular form of funding. And very often when we do a lot of factoring of the receivables, they need more machines. So guess what? Then I go to a leasing funders, leasing companies that will pay the supplier in Germany or Italy, let's say, who manufacture the machine. And then the client has got 4 years, 2 years to pay the leasing company back. Obviously the lease payments are tax deductible from an expense point of view.
Wow.
Okay, Martin. So it sounds like there's a lot of businesses out there that might maybe should really consider getting in touch with you. And I'm assuming a lot of this information is available on the website for people to look at.
Correct.
And what's the first step when people want to maybe, what's the first step working with you?
Is to speak to me. My wife says I'm a doctor of financial pain. That means I analyze what type of financial pain they have and what is most appropriate. Now let's assume we come back to factoring their receivables. There's about 8 or 10 companies that are the funders, but each one of them has a different appetite. So it's no use if they take a chance and go to one of them. It may be the wrong company completely for their type of industry. And that is where I believe over the last 15 years I've come in, to be able to suggest to them that yes, you need factoring, you don't need leasing, you don't need this, that and the other, and this is the best, most appropriate factoring company, factor, in other words, that you should go to. And for that I get paid by the factor because I'm bringing them business, and everybody's happy.
So I'd say you're more than just the doctor, you're the specialist. And then go to the specialist for the consulting.
And the GP. The GP and the specialist all rolled into one. Well, Martin, it's been great to meet you and have this conversation today. Thanks for coming in. And
look at money in a whole different way now.
And people can go to the website ifactoring.ca. Is there a phone number or email you want to?
416-524-5518. 416-524-5518 is the best number to get me, except Friday night and Saturday.
Okay, and you willing to work with companies all over the country, or?
Yes, we fund throughout North America, basically.
Awesome. Okay, well, thanks for doing this today.
Thank you.
Pleasure.
Look forward to seeing you again sometime. And
by the way, if you know anybody that needs any money, money on tap.
Well, that sounds fantastic. I think we might know a few people. Okay, we're going to take a little break.
Who doesn't?
Exactly. We're coming back with Uncle Tetsu after this here on thatchannel.com.
Cheesecake King.